Welcome, ladies and gentlemen, to the stock market show. Let's talk about the stock market, what's going on. So, yeah. Okay, so yesterday what happened? We crashed, right? Everyone was scared. Oh no, it's over. It's the end of the world. But we're still in a bull run. Like that doesn't make sense, right? Like that's just kind of silly. Like I want you to think about that. I want you to really pay attention to what I'm telling you. It's absolutely silly. Like if you look at the SPY here, SPY, represents the top 500 companies, right? So if the top 500 companies are struggling, what happens? Well, everything else is going to follow. It's going to follow it down or up. So yesterday, in the past week, I should say, we pulled back, right? We dropped. Let's see how much did we drop on the market? 2.13%. Whoa, wow, it's a real world ender, guys. A real world ender here. It's over. Yeah, this is normal. Look at this. Look at this big drop here. I want you to remember what I'm about to say. People have short-term memory. Write that down. People have short-term memory because it wasn't too long ago. Literally a few weeks ago, what happened on October 10th? Trump opened his mouth and what happened? We dropped. Look at that. Look at that big red candle. A lot of people who were leveraged, who used loans, margin, got destroyed. Yes, that's why you don't use that stuff. But you can see this is normal. Like look at this. This is nothing. In fact, this is 2%. This was a whole 3% in one day. And what followed is another pump, right? Look at this, right? So if history is going to repeat, it's almost like, whoa, it's almost like this is normal, right? Whoa, what a shocker. What a shocker. So this is a lesson on psychology, really. Like write this down for this is because this is for beginners. In a bull market, any pullback is nothing more than a dip buying opportunity. Okay, that's it. That's all there is to it. The stock market's always going to do this. Let me show you. Let me pull up the whiteboard. Again, this is a lesson video. So you pull up the whiteboard, and this is what the stock market does when in a bull run, right? We know this is what it's going to do, right? This is normal, right? Like it just keeps going up. If there was no such thing as selling pressure, if there was no such thing as selling pressure, right? And I always say this, like I drop knowledge constantly. Whether you write it down, that's a whole nother thing. But the stock market, if it weren't for selling pressure, if there was no such thing as selling pressure, only buying pressure was allowed, like we would just, you know what I'm saying? There would be no pullback. We'd just go straight, straight up. So I get that that's what people want, right? People want this. They want just everything goes straight to the moon, no pullback. But the reality is, let me grab this. Let me see if I can grab this here. Oops, can I not grab it? No, I guess not. Okay. So the reality is, that's what the market's gonna do. It's going to do this. That's normal. That's expected. But the funny thing is, and I'm gonna, reiterate this point. The funny thing is, um, on these drops, for some reason, people always like it. Just people have short-term memory, right? It's not too literally weeks ago, literally what a month ago, less than a month ago, we had a pullback that was actually bigger, and somehow people already forgot. Like, wait, what? That doesn't make sense. So people have short-term memory. That's the biggest lesson for this video is people have short-term memory. Remember that. And if you're in a bull run, which if you've been watching my learning to read the chart series, you should already know how to identify a bull run. We are still in a bull run. I can confirm that, right? We can go and I can make confirmation of that. Let me monthly time frame. Look at the MACD. White line crossing the yellow line equals bull run. Guess what? We're still in a bull run, and if anything, October was a green month for SPY, so for the top 500 companies. So we're doing fine. We're doing fantastic, actually. We've had what 3 6 green months in a row for the big companies, for the top 500. If you only trade the top 500, obviously you're smiling to the bank because you're just every month has been fantastic, right? But if you're obviously trading small caps, mid caps, stocks that aren't in the S&P 500, then obviously volatility is going to vary. But that's why I always say if you trade safe stocks, particularly those backed by the government, those that are in the S&P 500, QQQs, you can buy the top and it's always going to come back up for you. That's just, it's easy money, easy mode. So, I mean, look at this, right? Pulls, it drops here. Oh no, it's over. Oh no, it's over. Oh no, it's over. Oh God, it's super over. Oh my God, this is it, the end of the world, right? Like it's we this is but the thing is when you zoom out on the charts, like wait a minute, this is just normal in a bull market, right? Like what the hell? Right? And when you look at the big picture, it's just been month after month after month after month of green. So when you zoom out, you're like, wait a minute, this is a bull run and we just keep going up. So what does that mean? Any dip is just opportunity. That's why people always say buy the fear, because people are stupid clearly, and I think people don't look at the charts, so they're not even aware of this pattern. They're not aware, like, wait a minute, yeah, like this is expected. Like it's almost like it's expected for this to happen in a bull run, right? And so any drop from now on, you should not be scared. You should be like salivating. You should be like, oh hell yeah, can't wait to buy real cheap again, because goddamn, most people are just fools who don't understand this is literally normal, and I just proved it to you. So yeah, this is the pattern. People get scared here, scared. You buy the dip. You call dollar cost average down on the good ones, on the ones that follow the S&P 500 that keep going up over the long term, and you know it's gonna come back up for you. And I've said this time and time again. If you buy the top, let me clean this up for you guys. If you for some reason you're dumb like me buying SoFi near the top, but at dollar cost average down, it always comes back up for you and then some, because we're in a bull run. So you're fine. This is why I always tell people it's the difference between winning and losing. Sometimes it's just about the pick. What are you trading? If you're trading some garbage $2 stock, sure, the reward is maybe you can make 10x, but the risk is that you also just get, gapped down overnight and you lose a lot. And it doesn't follow the market. So, while the market's going to new highs, you're just sitting there hoping that this thing moves. So that's kind of, I'd rather take the guaranteed consistent income over, oh, let's play this risky stock, which, yeah, I could make more, but, but anyways, like SoFi, we bought at the top here, 250 shares, then another 250, and then I still haven't bought the other positions, but I'm going to add another 250. This is why I always tell people buy dips, but buy them, like, don't just throw your entire account, like, at it, like, buy in don't lump sum, buy in chunks, whatever that may be, 1/10, 1/5, 1/8, 1/4. It's up to you really, or you can just follow me one for one on the alerts, right? I added SoFi here. I might average up maybe and add up here, and then it goes to a new high. Boom, it goes to 40, and I still make money. Because you can't be afraid to average up. In fact, you don't have to be afraid to average up on a good one, right? That just keeps going up like this. That keeps following the top 500 companies. So that's the big takeaway. Let me just write the big takeaways, because I'm trying to be better at teaching and making sure you guys walk away with the concepts in your head. So there we go. Let me give you a second. Zoom in a little bit. Oh, I was already zoomed in? Oh, interesting. Okay. So S&P 500 equals top 500 companies. It is normal for us to pull back in a bull run. Buy the fear, right? Like we know it's gonna go higher. We're still there's no reason to not buy. That's just silly. Especially if you're buying SoFi, if you're buying, Nvidia, Palantir, all these other good companies that just keep going up, it's just easy. It's just so easy. It just is. I don't. You kind of have to experience it for you to finally understand. Like some of you will get to that point where you're like, oh, I get it now. That's what he meant when he said that. Like, oh my God, that makes so much sense. Like it's really this easy. Yeah, it is. It's just that obviously people want to buy short-term dated calls. They want to, take risky bets because they want, the gambler's high and oh my God, I got rich quick. They want bragging rights, all that. We don't care about all that. We care about consistent income. So it's normal for us to pull back in a bull run. Buy the fear. What else? Yeah, any drop on headlines, just buy. Like any big drop, just buy at the end of the day, right? Don't buy right away. Buy at end of day, because you're going to get a relief bounce, quote unquote relief bounce, but It's not even a relief bounce. Yeah, I just showed you. That's just normal for this kind of market. It's just normal for us to come down on a headline or whatever, and then we go higher. So yeah. So that's the big takeaway, guys. Yeah, you know, if you have to write it down, I mean, literally just draw this and just write this. Oops, this is so horrible. This is normal. Like this is normal. Like write it on a piece of paper. Like this is normal. This is like you know what I'm saying. Like this is that's it. Like just knowing this, you could go so far. Just knowing this, like you can go so much further than most. Clearly, because people are just dumb, right? Like they're just dumb. That's what it is. They're dumb because they don't have this knowledge and they don't want to put in the work. Surprise, right? People just want to get rich quick, so they don't put in the work. But this is normal. This is normal. Until we get confirmation of a bear market, there is no reason to be scared to buy the dip. And if you're buying a good company, you could buy the top and you'll be okay. I just showed you that. So now this is how I think. This is how I see it. Others might see it differently, right? Price action isn't going to be, you know, we're not just going to have a straight line up. Like at this, the S&P 500 is going to go to 700, but it's not going to be a straight line, right? We're going to chop on the way up, and you just buy the dip, right? This is normal. I can show you this. Look at this. It's almost like we just go higher over the long term, and there's some bear markets along the way, and those are nothing more than what huge discount opportunities. So there you go, guys. That is it for the video. Hopefully this helps you. If you have any questions, ask, reach out. I'll be making two videos today, two learning to read charts series. I know we haven't been reading the actual charts, but you'll notice we're not really focused on the individual candles yet. We're kind of just focused on everything around the price action. We'll eventually start talking about individual candles and how to read them, but um, right now I just want you to focus on, you know, little stuff like this that can go so far, that can really help you understand, like, oh, this is how it works. All these drops, all these months, all these October, all these drops have been nothing more than opportunity. So if you want to buy calls, you literally buy them on the drops. Like that's where you make the money. Or at the purple line. I can go on and on. This video is too long. I wanted to just keep it, you know, short, sweet, and to the point. That's it for the video. See you in the next one that comes out today.